All right. So just to give you a brief introduction, my name is Ron, and I'm the managing partner of Pine Street Capital. I've been trading for over 6 years, and basically what we do at Pine Street Capital is we specialize in trading CFDs on stocks, Forex, indices, commodities, crypto, and we trade through firms like Infinox. But Ronald will tell you a lot more about Infinox. And we also provide educational content, and we provide support to traders who are looking to take their trading to the next level. And we do that through our virtual trading floor, where we provide you with coaching, mentorship. We also run weekly meetings whereby we talk about what's going on in the markets. We have a little Q&A as well. And we also provide analysis, market analysis, and trade ideas. So that's Pine Street Capital in a nutshell. And the reason we sort of organize this training is to sort of get the right educational content out there. Because if you're just starting out in trading, then I'm sure you've noticed that there's a lot of stuff online. And we almost want to provide content that's actually valuable and actionable for you guys to sort of enter the space with. Because one thing I've noticed is this space is filled with a lot of lifestyle content that you can't really take and put into action in your own trading account. So that's the reason we've partnered with Infinox, and the reason why you're going to get some actionable tips from Andrew. But before Andrew gives the main presentation, I'd like to hand over the floor to Ronald, who's going to tell you more about Infinox and what they do.
All right, thank you, Mr. Ron. Appreciate the invite, man. And we're really happy to be here with you, sharing this time with you. And yeah, me and Mr. Andrew, or Mr. Andrew and I, we are senior executives here at Infinox Capital. And, you know, bringing the best to the world, of course. And but let me introduce Infinox to you guys first. Infinox is a multi-regulated global brokerage, and you know, we actually facilitate the trading of Forex and CFDs on trading platforms such as MetaTrader 4, MetaTrader 5, which I'm sure some of you guys that are online here with us tonight is familiar with. We are regulated quite heavily, so we're regulated in the UK, in the Bahamas, in Mauritius, and here at home with the FSCA in South Africa. And with more than 20 offices in the world, with our head office being in the UK, London, we actually run operational office here from Rosebank. And we just actually opened a new office in Cape Town, you know, there by you, Mr. Ron. And so we can provide you guys local client services, local account opening, payment services, anything that is related to your account is not overseas. It's here in South Africa for you guys to ensure that you guys get the best service that you guys, you know, deserve. All right. So just an introduction to the Forex industry a bit. The Forex industry is roughly $5 trillion big, being traded daily. And it's one of the biggest markets in the world. If it's not, I think it is the biggest market, isn't it, Ron? And, you know, you can trade it 24 hours a day, 5 days a week, never ends, you know, until it's weekend. Then we all hit the snooze button there a bit on Monday and, you know, start trading again. So, yeah. Brokers like Infinox actually make these markets available to, you know, to people such as us, normal people living in the house, because trying to, if you want to actually trade stocks, Forex, and see, well, futures on the exchange, you have to have quite a lot of money. You need to adhere to certain requirements. And the broker just makes it easier for us as normal people, you know, make it more affordable to trade on the markets as well. All right. So for those of you that don't have a trading account, like I said, we're brokerage, so you can open a trading account with us anytime. The link is down in the description, and you know, for you to create the account. And yeah, let Mr. Andrew come and show us how to create a trading strategy and, get ourselves trading and, making a success of our trading as well.
Great stuff. Awesome. Thanks, Ronnie. Hello, everyone. I hope this is going to be good for you guys. So with all the introductions around Forex, around CFDs, thank you for them. Let's hop into what is trading, right? So essentially, what is trading? Trading is basically buying a product at a lower price and then selling it at a higher price, right? In order to make a profit from that. Now, with Infinox, we offer this service online. So you're able to buy and sell products online. We do offer it at, I guess you could call it a reduced rate, because we give you the leverage in order to magnify your position within the markets. And so you're able to trade products that are quite expensive sometimes at a reduced rate, as I say. So yeah, that's pretty much trading in a nutshell. How we trade is with lot sizes, right? So this is the size of the position that you enter the market with, right? So the lot sizes range from the smallest amount, which is a micro lot, which is basically 1,000 units of a particular currency. So it could be, it's normally the dollar, because the dollar actually makes up 80% of all trades that go on within the different markets, because it's the global reserve currency. It's huge. And yeah, it's good to follow what's actually happening in America because of this. Now, the lot sizes, again, the smallest amount is the micro lot, which is 1,000. We can have multiple different micro lots. So you can open a position with 2 micro lots, 3 micro lots, and then we get on to mini lots. So mini lots, with a micro lot being 1,000 units, mini lots are 10,000 units, and then we get a standard lot of 100,000 units. So you can hear that these are significantly large numbers, right? But you're able to, as a regular person, you're able to access that amount by using leverage, right? And that's what we offer at Infinox. Now, what is leverage? Leverage is a tool that magnifies your position within a market. So if you're trading a micro lot, for instance, you don't have to put down the $1,000 or the 1,000 euros in order to trade this amount. You put down something called margin, which is pretty much just a good faith deposit in order for you to trade that leverage product. Okay. That's pretty much it. So the margin is going to get larger the larger trade size you're placing. So for a micro lot, you're going to be putting down less margin than, for instance, a mini lot. Okay. Now this comes into play with risk management, but we'll get there later on in the presentation. Okay. With regards to the sort of the costs involved in trading, there's something called spread, and I'm sure many of you have heard of spread before, but just to give you a brief understanding of what spread is that it's the difference between the buying and selling price of a particular financial instrument. So the buying and selling price on the pound dollar, the difference between the buy and the sell is going to be your spread, and that's going to be your cost. Again, the larger the trade size, the more your cost for getting into the trade. All right. Okay, so now that we've got a little bit of a basic understanding of trading on leveraged products and how it works essentially, I want to introduce you to various different types of analysis, right? So essentially there are 2 types of analysis. We have the technical analysis, which is basically understanding or analyzing the charts, right? So it's very good for guys who are good with data and data management and data analysis. You can analyze these charts and get a sort of mathematical representation of where this price could be heading, right? There's various different places or points of resistance and support that are key psychological areas for analyzing a trade and deciding on whether or not this trade is going to go up or go down. Okay. And then with technical analysis, so there's just to expand on that a little bit, there's various different types of technical analysis, and in your trading approach, at the end of the day, this is going to be, you're going to tailor your approach to who you are, how you live your life, your lifestyle, and that sort of thing. But there are specific things in trading that always remain the same, and that's pretty much the basis of trading, and that's what I'm here to elaborate on today and give you some insight into how it works. So we've got the technical analysis, then we also have the fundamental analysis, right? So the fundamental analysis is actually where you're analyzing what is happening around the world, okay? And what are these perhaps geopolitical events? How are they going to affect certain markets, right? So if you just take, we'll go back to GBP USD, that's the Great British Pound versus the US dollar. If we're looking at that, we should know what is happening within the UK as well as within America, so that we can get an understanding of where we think the price may be heading. And so I know a lot of you guys are from South Africa on this webinar that we're hosting. So if we think back to a month ago with all the riots and all the looting, you can take that as a fundamental and use it to place a trade, right? So all the riots and the looting that went on about a month ago did see weakness within the rand, and therefore a pair like USD ZAR, you're going to see the US dollar strengthen. It doesn't necessarily mean that the US dollar is strengthening, but it means that the US dollar is strengthening compared to the rand. So you see something like that, which is a fundamental, and you can trade it, right? So that's a big event, right? A lot of people make use of economic calendars. So these economic calendars give you scheduled events that are taking place and tell you the day and the time that they're taking place. Also, they'll give you a good economic calendar is going to give you the expected volatility from this particular event. A good example is non-farm payroll, and non-farm payroll comes out every month on the first Friday, right? This is an indication, the non-farm payroll is an indication of the jobs that have come into the US economy that are not related to agriculture at all. So non-farm payroll. So how many guys were added onto into the US economy's payroll that were non-agricultural jobs. And that gives you an indication of growth within an economy, and gives you an indication of how well that currency will perform. So if we go back to the pound dollar, if we have good news out on non-farm payroll on a particular month that's strengthening the US dollar, we can look at GBP USD, and we can short GBP USD perhaps if we think that the news that has come out is going to give is going to make an impact in the markets, and NFP is always going to create an impact in the market. So that's just a little bit of a understanding of fundamental analysis, right? So yeah, I wanted to go through the products that we offer, but that has been covered. So obviously we've got the Forex side. We offer commodities, stocks, energies, and indices as well as cryptocurrencies. So you're able to trade an array of different instruments in the market, analyze them, and perhaps make some profit from that. Okay, just gonna share my screen so I can show you guys the charts. Okay, perfect. Cool, we've got the chart up now. So this is a chart of, guess what? GBP USD, staying in theme tonight. So yeah, this is a 1 minute chart of GBP USD. What you see here is actually candlesticks. This is how we measure movement within a currency pair or an index or a commodity. It's how we measure it, right? So how these candlesticks actually work is that we have bullish candles, and then we also have bearish candles, right? So the yellow candles that go up are going to be your bullish candles, right? That symbolizes the price is obviously going up. And the white candles are the bearish candles, okay? It's going to be, if you're looking at it on a different chart, you might not see yellow and white, you might see green and red, or black and white, depends, but you can always alter this, that sort of thing and make it your own if you want to. Okay, so yeah, these are candlesticks, and each candlestick is going to represent a different amount of time, right? So on this on this chart, I have a 1 minute time frame. So each of these candlesticks is going to represent 1 minute. Okay, we can go all the way to a month, and we can get, let's go out a little bit, we get a better perspective of what this currency pair, GBP USD, has been doing since 1998. You can see over here. So since 1998, what has it been doing? What sort of path has it been following? And you can see here from around 2007, 2008, the pound has, well, this was a huge drop, but the pound has been relatively weaker over this period of time than the US dollar. Whether that will continue or not, I'm not sure. These things can, the market can change in a flash. Just to give you an example, with COVID-19, when the world closed, essentially, we saw huge drops in prices like the S&P 500, right? Like the S&P 500 dropped significantly. So the market is always moving, and we must keep up with the market as well. But there are some ways well, there's a way to create a base of trading that you can use all the time. And the more you use it, the more you'll adapt, well, the more you'll grow your trading strategy, and you'll grow as a trader in general. You can have 20 years of experience as a trader, and every day you're going to be learning something new. I can guarantee you that. Okay, so sec. Okay, so with these time frames at the top here, and with having the general overview when looking at a monthly chart, it's good to do something called top-down analysis. So top-down analysis is exactly how it sounds. You look from the top to the bottom. So you're looking from an outside perspective, a monthly chart, like a very far out reach in a sense. You're looking at a monthly chart and getting an idea of how this currency pair has performed over time. Then we move through to a weekly chart, where, remember, every candlestick is going to represent 1 week. Okay, so each one of these candlesticks represents a week, and we can see on a, I'd say, a smaller scale what the trend has been on a weekly basis. So a more a more I don't know the words for it now, but we'll get there. Yeah, so this is the weekly. All right, so from the weekly, we'll go through to a daily chart, and we'll see that it's a bit different to the weekly. So the weekly has shot up to a point of resistance here, which I'll show you in a bit, and it seems to be retracing downwards. Right, so we've hit the top here. You can see there's levels of resistance up here, and yeah, it looks like it is retracing down. But let's make more sure and go to a 4 hour, or maybe a 1 hour rather. So on a 1 hour, we can actually see that significantly, so each one of these candlesticks represents an hour, remember? We can see that we've seen a significant drop over the last few days. We've seen a significant drop in price over the last few days. Okay, so the top-down analysis at the end of the day, you're looking to get the general overview of what the currency pair is doing, and then from there we're looking to go all the way down to maybe even a 5-minute chart where you'll see the prices moving quite quickly, and we'll time our entry at a 5-minute chart just to get the best out of the trade, like to milk it properly. Okay. So back to support and resistance. Okay. Now this will help with timing your entry and getting more of an understanding of what the market is doing and where it could be going. So if we're looking at a monthly again, we can see here that we've got points of support and points of resistance, right? So let's show that. Okay, so we've got our line here symbolizing some support, and we've got some resistance over here. All right, you can see that the resistance in this time period, the resistance is very closely linked to the support on the further away time period, sort of thing. Just one sec. We also have a level of resistance up here. So just to give you a little bit of an understanding of what support and resistance are, we've got resistance where it's hitting the roof, right? So you can think of it in that sense, where the price is hitting a certain point and it's not going past that point. So it's almost like a psychological barrier that isn't passed until it is, as you'll see here. So we've got the support at the bottom, which, as it says, it supports the price. So we've got resistance at the top, support at the bottom. We did see around 2015 the price break into a different sort of level, because we've got this level here. It broke to a level below. Excuse me. It broke to a level below, and now it is ranging between, let's see the price, 1.207 and 1.4327, right? So it's been ranging here, whether it's going to break up and get into this section, or it's going to stay here. I'm not 100% sure, although in my personal capacity, I have shorted GBP USD. And hopefully it goes my way, otherwise I'll look like a fool. All right, so, So from this level of resistance up here, we can see it hit the level of resistance. And that's why I actually shorted it. So it hits the level of resistance up here, and then it starts retracing. So I believe that we can expect, well, I can expect the price to go down to maybe 1.29330 pretty comfortably. It may even drop down to the support level of 1.20735. But my take profit is sitting at around 1.293, around there. Okay, but when I went into the trade, I obviously went through to like a 5-minute chart. Okay, so I don't think at this point, where we've seen quite a bearish rally, right? This bearish rally, the bearish means it's going down, so it's on like a negative, and bullish is positive, so the price will be going up. Okay, so we've seen quite a bearish pattern within, let's see, it's probably the last, last sort of like 5 days, we've seen quite a bearish pattern on GBP USD, right? So if I see a bearish pattern in that sense that's going on for quite a period of time, I'm hesitant to then go sell right at the bottom here. I'd rather wait for the price to go up a little bit and then place my sell there. That's from doing the analysis from the monthly chart over here and analyzing that in the long term, I believe that the price will be going down. And so we went to the 5-minute chart, and I'll time my entry appropriately. So I'll wait for the price to bounce back a little bit, and then I'll enter. That's if I'm being very precise with my entries. I am personally a position trader, so I don't necessarily have to be so particular with my entry points, because I'm looking to get 500 to 1,000 pips every trade. Whereas if you're a scalper, for instance, you'll be definitely looking for entry points. That's the essential part of scalping, really. So just to give you an idea of the different types of traders out there, as I mentioned, there's the scalper, there's the position trader, you also have the day trader and the swing trader. So to give you an idea of how these different trading styles work, a scalper is an individual who will be in the market for a very brief time. So these guys can be in the market from anywhere from 5 minutes to 30 minutes, and they're looking to make good profits on a short amount of on a small amount of pips, right? So that means that they are typically using larger lot sizes, and their risk is a little bit higher. There's ways to manage risk for the different sort of trading styles, and yeah, your risk management is going to have to comply with your trading style. So as a position trader, for me, I trade with very small lot sizes, so I leave a lot of margin open, and yeah, that allows me to have a lot of flexibility within the market, and I can withstand waves of the market, and yeah, it's like that. So we have the scalper that's in and out of the market, right? We've got a day trader, which I'm sure you can guess, you're in and out of the market within the day. These guys can be in the market for 2 hours or 1 hour rather, up to like 10, 12 hours. Okay. And then we have the swing trader, which is someone who's basically in the market for up to a week. And then a position trader like myself, who can be in the market anywhere from a week to a year or 2 years. Like you can continuously hold positions for a really long time. Okay. So on the note of risk management, when we're getting into trades and we're managing our risk within the market. Since you're trading on leveraged products, you have a high reward, high risk sort of situation. And so we need to be trading with a trading strategy. You need to formulate your own trading strategy that suits yourself, but you can learn from a lot of guys that have traded in the markets a fair amount. All right, so if you can see here, I have a balance of $893.90, and my equity is going to be the same, and my free margin is also going to be the same. On the topic of margin, when we place a trade on a leveraged product, we do need to put down the good faith deposit of margin, right? So every time we place a trade, our margin amount is going to get lower, and we have to manage our margin, because if we do not manage our margin, once the account, it's going to be different from broker to broker, but with Infinox, once the account's margin percentage reaches 50%, your biggest losing position will be liquidated, and it's not fun to have your position liquidated without your consent, in a sense. So yeah, it's good to manage your margin, and yeah, so the margin call is essentially a safety net, so that you don't get into, since you're trading on leveraged products, you don't lose more money, in a sense. Okay. So with regards to the risk management, so I have $893.90 in my account. I'm not going to be trading huge lot sizes. I'm going to be trading smaller lot sizes. So just to give you guys an example, when we were talking about micro lots, mini lots and standard lots, the way we see it is up here, or we can click and say, right click, new order. Right, so this pops up here, and our volume 0.1 is going to be the mini lot, right? So the mini lot was 10,000 units, right? If we want to get it to the smallest amount, which was the micro lot, we say 0.01. So this is the smallest lot size that we can get into the market with. It also carries the least amount of risk, because we're putting less, we're using less margin in order to get into the trade, and we're managing our margin more correctly. Okay, you can definitely also depending on your account size. So my account size being 893.90, I can risk a mini lot. I can say 0.10, and that is essentially, if I'm trading on a leverage profile of say 500 to 1, meaning that I put down $1 for every $500 buying power that I have. That would mean that for a micro lot, I put down $2 in order to place that micro lot in the margin side. And if I'm trading a mini lot, I need to put down $20. All right, so $20 of 893.90 isn't all that much, and so I'm happy with the sort of risk that I'm approaching the market. So I'm just going to sell by the market here. This means that I'm going to be selling at the price. All right. Now you can see this green line over here is the price at which I got into the market. Okay. So if I want to place a stop loss or take profit, I'll show you how to do that now. Let me explain what they are first. So a stop loss is a price at which you want your trade to close out automatically in order for you to not lose any more funds. And similarly, the take profit is a price on the market that you want the trade to close when you've hit a point in the market where you're happy with taking that amount of profit. Okay, so there's various different ways of doing the stop loss and take profit, but a lot of guys use a ratio of 3 to 1, right? So they're risking a portion of 1 compared to being able to receive 3, right? So so this is going to be my stop loss, right? Because I've sold. So if the market goes, if the market is bullish, then I'm losing money. If the market is bearish, then I'm making money. So my stop loss is going to be higher than the point at which I got into the market. All right. So my stop loss, I'm going to put it round about over here. To make this easier, I'm going to go to a 1 hour. Yeah, that gives us a better view. So I'm risking that is $12 that I'm risking, or 12.1 pips, right? So 121 pips, it's actually 12.1 pips on MetaTrader 4. So I'm risking 12 pips for gaining, that's about 3, gaining 47. Let's make it. Cool. So I'm risking 12 pips to gain 35 pips, right? So this way, I'm risking 1/3 of what I could make. And because I've done the proper analysis beforehand, and I'm happy with that, I'm happy with risking 1 to gaining 3, because I believe I'm going to gain 3, but I also could be wrong, and therefore I put my stop loss at a point at a point at which it needs to close the trade, and and then I've made the loss, but I move on. Okay. So with regards to trading, actually, from my experience, and a lot of traders will tell you the same thing. Pretty much the biggest obstacle in the way, after getting educated and all that, when you learn how to trade, the biggest obstacle is managing your emotions and managing your psychology. And we need to be aware of our psychology and our emotions when placing a trade. I remember when I was starting out, I did very well. I managed to triple my account very quickly, and the element of success was actually my downfall. So when I realized this success, firstly, what came over me was excitement, right? And a bit of overconfidence, right? So I've tripled my account in a very short period of time, and therefore I believe I'm the god of trading, and I'm unstoppable, and this is so easy, right? When you get into that sort of a mindset, greed normally kicks in. And what we find with essentially pretty much all traders is that when that greed, that overconfidence, that overexcitement kicks in, they overextend themselves in the market. So you place one trade. Excuse me. So you place a trade. You place one trade. You're successful. Okay, cool. I've been successful in the market. So I've then start looking at other markets and other opportunities. Eventually, you're looking at like 20, 30 different markets and placing trades on all these different markets, and overextending yourself in the market, overusing your margin, and getting yourself into a little bit of a tricky situation. Because if a big event happens, for instance, as we were saying earlier, the COVID-19 event, where markets crashed, gold soared up, you're overextended in the market, and you're probably never going to survive those sort of crashes. Yeah, so it's very important to manage your emotions and manage your psychology, and this can only come with experience, really. You can get some insight, like from myself. Look out for the greediness tendency within yourself. Look out for being overexcited, and look out for being overconfident. When we see these emotions kick in, and we kind of want to follow these emotions in our trading strategy, then we're not actually following our trading strategy. We're following our emotions. And while we're human and we all have emotions, we need to almost eliminate emotions from this process. So we need to make sure that the emotions are not dictating the trading style, but the trading strategy is dictating how we trade. All right. Let's see. Just checking if I missed out on anything here. No, I think that's pretty much it. Yeah. So if you do have any questions, we do have our contact below, and you're welcome to get into contact with us. Let me just stop sharing the screen here. Okay, yeah, you're welcome to get into contact with us, and yeah, I welcome you to get into contact with us. And yeah, with regards to getting started, the only way to really get started is to get started. And so yeah, as Ron said, you're able to get started below by creating an account, and any questions, we welcome them. Thanks a lot, guys.
Thank you, Mr. Andrew. Appreciate it, man. That was really informative, and yeah, it provides a really good foundation to starting a good trading plan that can lead you to success, guys. Remember, always plan the trade and trade the plan, eh? All right. Well, look, if you're still unsure about trading on your own, we do have this amazing copy trading platform called IX Social. It's where you can learn and copy from the best strategy providers in the industry, and we only onboard the best as strategy providers, and such as Pine Street Capital, Mr. Ron here. He's one of the strategy providers on the application. So feel free to check it out, download the application, see what Mr. Pine Street Capital is doing over there, and yeah, see if that's something you would want to do as well. Like Mr. Andrew said, if you guys are looking for more information, you can either reach us out on the contacts page down below somewhere, yeah? Okay, and remember, like, share, and yeah, just subscribe to the page so you can learn more going forward. All right, I urge you guys, please create trading accounts. We do have an amazing welcome bonus available. So if you deposit at least $50 into your trading account, a little bit, it's just $50, we can give you a $25 welcome bonus, you know, just to help you and assist you in growing that equity so that you can be more successful in your trading. All right, guys, all the links in the description. And yeah, thanks to Mr. Ron again for inviting us, joining us in this webinar, us joining him. And yeah, looking forward to hearing from you guys. Back to you, Mr. Ron.
All right. Thank you very much, Ronald. Thank you, Andrew, for that wonderful presentation. I saw quite a few questions coming in through the chat, and I mean, I was busy the entire presentation. So thank you all for all your questions. Like Ronald said, we have a lot more educational content coming your way. So hit the like button so that it reaches more people, and subscribe to the Pine Street Capital YouTube channel. And you can also be a part of the community on Telegram. The link is also in the description. We share more educational content. And if you do decide to trade with lot of support that will help you through your first stages in taking your first trade if you haven't already. But if you have already been actively trading, we can help you out. Feel free to reach out to me, as in I am available to you 100% of the time. But other than that, that's the end of the presentation. I hope you gained some value from it, and hope to see you for the next video. I should be dropping another video in the next couple of days to provide you with further information on how to take your trading to the next level. But with that said, I'll see you guys in the next one. Cheers.